Most people think investing $100 doesn't really matter, as if $100 is too small to change anything. But that exact belief is why most people never actually build real wealth, because they never even get started. The first $100, it is not about getting rich overnight, it is about setting the trajectory for every single dollar that you are going to invest after it. If you invest this wrong, you could stay stuck because you might be investing into the wrong things and building bad habits. But if you invest it right, it can compound into something way bigger than you can ever imagine, especially if you start in your 20s. If you had $100 to invest right now, what would you put it into? Drop a comment down below because I'd love to hear your thoughts. Before we talk about the how, we have to set a couple of ground rules. We are going to assume you already have an emergency fund built, which is a cash pile of 3 to 6 months of expenses. We also want to assume you have no high-interest credit card debt, because no investment is going to beat a 30% interest rate. At the end of the day, you want to get rid of that as soon as possible. Our next assumption is that this money stays invested for at least 5 to 10 years. If you know anything about compound interest, you know that the longer you invest, the more your money builds on itself, kind of like a snowball rolling down a hill. The goal of this first $100 is to build habits you can follow over a long period of time. While building these habits, you are actually going to see how markets behave. You'll see what it looks like when things go up and how you handle it when things drop. Many beginners treat $100 like a lottery ticket instead of an actual foundation. You don't even have to invest it all at once. Maybe it is just $100 a month for 10 months. I am not a financial advisor, but one of the easiest things to do is to look at an ETF like VOW or VTI. When you invest in an ETF, you are essentially just buying a basket of stocks. I promise this won't be a stereotypical lecture, but investing into broad markets helps you beat the day traders and the people chasing hot stocks. Option 1 is just putting it all into VTI or VOO. Option 2 is a split strategy where you put 700 into the S&P 500 and 300 into a growth-focused ETF like QQQM. This keeps you engaged and prevents you from selling because you are bored. Your number one priority when you are young is to invest in growth because your biggest asset is time. There is a huge difference between starting at 20 versus starting at 30. Playing it safe with cash is actually risky because inflation eats away at it every year. Everything gets more expensive and the opportunity cost of sitting on the sidelines is high. $100 today could be worth $20,000 or $30,000 a couple of decades from now. It changes the way you think because you finally have skin in the game. You start to learn the psychology of seeing your money move. It is much better to learn these lessons with $100 than $100,000. The moment your money is invested, you stop thinking like a consumer and start thinking like an owner. Responsibility creates better decision-making. And that is why the first 1,000 is harder than the next 9,000. Real wealth starts with participating, not just watching from the sidelines. You don't need a huge amount to start. Even $25 a week adds up. It teaches you how to handle risk and volatility before the stakes get too high. Psychology matters because losses hurt more than gains feel good. If you can stay rational with 1,000, you are training for much bigger numbers later. My portfolio fluctuates between $145,000 and $150,000 now, and if it dropped 50%, I wouldn't bat an eye. I would just keep buying because I see it as a discount on high-quality assets. This mindset will get you so far. You'll see headlines every week telling you why the world is ending, but the people who keep it simple do the best long-term. Your framework determines when you buy, hold, or sell. If you don't know why you bought something, you won't know when to hold it. Get some skin in the game and don't wait for the perfect move. Early investing is about understanding the process and staying consistent. When things are complex, people hesitate. So keep it simple to create momentum. The market rewards participation, not certainty. Your first investment doesn't have to be perfect. It just has to happen. You won't learn by watching. You'll learn by doing small mistakes. Now prevent massive ones later. Whatever you do, please avoid the gambling of options trading or day trading. Slow compounding feels invisible at first, but it picks up speed. Once you hit 105,000 feels a lot closer. I remember hitting my first 100 at 21 and realizing it didn't take as long as I thought. It motivated me to find ways to grow even more. There are plenty of platforms like M1 Finance that make it easy with fractional shares. The barrier to entry is lower than ever, so don't let it stop you. I hope you found some peace and clarity in this today. If you did, hit that subscribe button and I'll see you in the next one. Peace.